What I'm seeing here on the ground, everyone, is that we have the potential of an even bigger downturn. Because every single day I find new listings with big price cuts. I find sellers taking losses. And I'm going to show you some listings here in a second where these houses have been on the market for 3 or 4 or 5 months and the sellers are cutting prices and the buyers just aren't coming in. Here's one example, everyone. This is a 3x2, currently on the market for $434,000 here. This house has been on the market for 120 days. That's the true days on market. And they've already done some price cuts. Now, the owner of this house bought it in 2022 for around $430,000. So in 4 years, no appreciation on this house. They're basically breaking even, maybe even losing some money on the realtor fees. The question is, what is a house like this actually worth, and what is the price that this house would sell at? We're actually in a fairly desirable zip code south of Nashville in Nolensville. Our long-term growth score for the zip code on Reventures is 60 out of 100. High incomes, good demographic growth. However, we plugged that listing into our listing analyzer tool, and we're coming up with a conservative offer on that house of $383,000.
Is he right? I mean, is this a 380 house? Let's take a look. 2373 Fairchild, they bid this house up in the spring of 22 by $50,000, originally listed at 380. They bid it up 429. Look, I'm just going to go ahead and tell you now, if you overpaid or bid up a house in the spring of 2022 when there was nothing on the market, then you will very likely lose money.
And we're coming up with a conservative offer on that house of $383,000.
Is that the right amount to offer? Well, a couple things you need to know about this house. First, it's a Davidson County house, okay? Nolensville has great demographics, but the shift between Williamson County and Davidson County is extraordinarily important. You cannot just look at Nolensville without considering which county it's in. 2373 Fairchild, here we go. It's in Carruthers Farms. Massive active listing growth right here. This is a 2019. They've got major new build competition, 1,300 square foot house. In this price point, in this size for a detached house, they're mostly going between $276 a foot and $307 a foot. They bought at the peak of the market. They bid up the house by $50,000. Their original list price in 22 was probably what it's worth. From a sales price perspective, we can see that the high was $559 in 2022. It did not crest $480 in 2025. That's a drop of 14%, and it's not unreasonable to think that all of the houses in this neighborhood, especially the ones purchased right around that time, have dropped 10 to 15%. I don't think I would go over 380 on this house. Anybody who's not offering lower in a time like this is really missing out on opportunity. It should not be paying full list price. And even in competitive homes, just remember there's more coming on. I'll show you a chart here in just a minute. The other reason I would be cautious about that, we see new builds going for well below $250 and $260 a foot. Now, these are larger houses, but they're still going for $250 and $260 a foot. And they're coming with incentives. The truth is they overbid this from the beginning. You hear the saying, you make money when you buy? Well, there's another saying, you lose money when you buy. These people, they lost money the day they bought this house, and now they're trying to scrape it back. And the truth is they're not going to get $435. Even if they did, they're already losing money. They're probably going to have to drop the price. We're going to take a look at a neighborhood that I believe is primed for a massive correction. But in order to understand why I think that, we need to talk about Ladd Park in 2022. In 22, Highlands of Ladd Park had houses going for $1.6, $1.8 million. By the end of 23, these houses would have lost 25% of their value. And you can see, look at these outliers. There's one $1.8 million. Let's take a look at it. It's a beautiful home. Sold off market and at $1.8 million, 380 in Ladd Park. But what happened? Why were they unable to get back to these places up until, I guess we started having a few this last year. Interestingly enough, it bounced back. What happened from here to the end of 23? Why was there a price crash? If you go just down the street from Ladd Park, okay, so here's Ladd Park. We're going to go to St. Marlow. St. Marlow, these houses were gorgeous. They were going for, vast majority of them were going for $280 a foot, $260, $280, and they were stellar homes. It didn't matter which one you picked. They were great builds, really nice houses. They were crushing Ladd Park. You look at how many were sold. How could Lad Park compete with this? Just down the road. So until these dried up, which took through 24, and lo and behold, once you got on the other side of 24, what happened? They were all sold out. Lad Park bounced back. Let's look for another neighborhood that may be happening to right now. If we look, there's one that sticks out like a sore thumb down here, and it is Canterbury. What is going on with Canterbury? 16 active listings this year, 16 active listings last year, but look at the contract volume. Last year, on this day, on this Saturday, last year, there were 13 under contract. This year, only one. What in the world is happening? Look at this view. There's only one that went under contract in the past 31 days, okay? I just got that under contract, 318 through 417. Only one has gone under contract in this neighborhood. We have some north going under contract. We have some south. Let's just look at the detached. Let's see what's going on in the detached arena here. June Lake, just sucking the oxygen out of the air. June Lake with 10 under contract. Detached houses, none in Canterbury. If you were to look at Thompson Station, you would not see any demand difference. You would not see any real price changes. But if you looked in Canterbury, what you would see is a complete vacuum compared to Thompson Station. There's 57 under contract in Thompson Station. When I took this snapshot, it was a few days ago. There's only one under contract in Canterbury. You go back to last year, last April, there was 13 under contract with 51 in Thompson Station. There's more demand in Thompson Station this year than last year. June Lake has completely absorbed. This was done. I was helping a buyer look in the 700 million range. June Lake has absorbed all of that demand. So how can we look at this data into, which by the way, if you look, I've added this map. You just click on the map and it will adjust all of the charts. Look at this, Williamson County, up, active listings up 8.6, contract volume 2.6. So let's go to Canterbury, and what do we see? Complete demand vacuum. We're starting to see price cuts spike. Price cuts are 6. We go back to last year, there were 3. So price cuts have doubled. Active listings are 16, contract volume, no contract volume. You look at the list prices, we got a lot of confidence in this neighborhood right now. A lot of confidence. You can see that prices are dropping, and yet look at all the listings above 300 a foot. Sales price, the floor is 800 all the way up to $1 million. But again, these are all sitting. There's nothing under contract right now because they're looking at the comps. They're saying, hey, it's springtime. Let's push the price. Thompson Station's solid. There's nothing wrong with this neighborhood. And yet I can tell you unequivocally the fact that demand has disappeared in this neighborhood while demand in Thompson Station is at a high. It's higher, 10, 15% higher than last year. There's major warning flags in this neighborhood. It's giving me 2023 Lad Park vibes. And the truth is that these sellers they're going to need time to realize that they have missed it, or potentially June Lake gets absorbed. They roll through. I don't know how many houses are left in June Lake, but maybe all this demand gets absorbed, and then they will be able to sell for better prices, or they won't have near the competition that they have right now. But right now, they're mispriced. There's zero demand in this neighborhood. It's a vacuum. You guys tell me what you think. Am I right about June Lake? Is June Lake absorbing what's happening in Canterbury? Is there something else going on in Canterbury that's creating a dynamic where nobody is buying in that neighborhood? I'm just looking at the data. You tell me what you're seeing. I would love to know from a high-level perspective. I've added this map so you can use it on the active listings. Active listings are up 10% in Nashville. Contract volume up 2%. I do expect us to track more with 2024. What does that mean? That means we'll probably be up 10% in contract volume by the end of April and going into May. Y'all, March, hotter contract volume. We're going to see that report this week. April, up even more. Just remember, last year, Liberation Day, this is more about just people buying on a normal pace, a 2024 pace, versus responding to Liberation Day. April contracts are going to be way up, in my opinion, by the time we get to the end of April. We'll see. We'll track this, see what happens. Price cuts still increasing at a higher pace along with those relistings. We are softer this year. You should be more aggressive. You should be asking at least 3% off, 5 to 10%. Nothing wrong with that. It is a soft market. You need to be careful. Let's just look at Rutherford County. If you look at Rutherford County, what we see is contract volume has dropped. This drop right here, this is a mortgage rate response. This is a mortgage rate response, in my opinion. People were loving the lower mortgage rates. Now they responded poorly to the higher mortgage rates. I think Rutherford is probably the most interest rate sensitive county as a whole. Rutherford County is telling us that people are starting to respond to the mortgage rates. Listen, use data, be aggressive on offers, use tools like even the Reventure. I think it's great. I mean, if you offer 380, you're going to be a lot closer to the right price than if you just try to offer list or even like 3 or 5% off. Be more aggressive on your offers if you're a buyer. If you're a seller, be more flexible. You got to be flexible this year. The inventory is piling up. The price cuts are piling up. And depending on your area, you've got way more competition. You've got some serious new build competition happening. It is a more competitive market. Even if prices are the same, even if median price is the same, buyers are getting more value this year than last year. And with that, I hope you all have a great rest of the day. Thanks for watching. I look forward to seeing you next Saturday. Thanks a lot.